Hi, good evening. Today is June 23rd. S&P 500 traded mostly in a very tight range overnight, mostly in 15 points range. And for most of the actual trading day hours, it traded in the range of 10 points. Overnight, we came close to the infamous Soji level, 42.50, but didn't cross it, and we traded as high as 42.48, but failed to make new all-time highs, unlike NASDAQ, which made all-time highs today. The market sold off, S&P sold off at the end of the day on the news that Dallas Fed President Kaplan said that I'd rather start tapering, assuming we meet our conditions sooner rather than later, so that we have more flexibility in deciding what we want to do on rates down the road. So, like I said, my head is spinning now between Fed being dovish and hawkish every other day. They keep changing their stance, but the market seems to not to care and just trading in a narrow range for most of the day. I think the market thinks that the market will decide what and when the Fed does rather than the Fed.
Or increasingly, it sees the Fed as not being really in control of this, that it sort of escaped their clutches with very high spending and big infrastructure bill coming, and some other things that will continue to drive price action, and the Fed not able to really do much about it.
Right, and the Yearn today said that inflation will go back to normal after this year. At the same time, she also said that annual inflation will be below 5% by the end of the year. So it's interesting that 5%, and she thinks that that's low inflation. On the other hand, Fed Powell said that inflationary risks have increased, and the Fed should be aware of these tendencies. So they can't even agree between themselves which message to send. I think they're confusing people on purpose so that the market doesn't know what they want to do. I don't know. But at the same time, meanwhile, the market report was in a non-transitory camp and said that we have record supply shortages that are getting worse rather than better. And firms are fighting to fill vacancies, and manufacturers' warehouse stocks are being depleted at a worrying rate as firms struggle to meet demand. And the market report also said that while the second quarter will likely represent a peaking in the pace of economic growth, a peaking of inflation is far less assured. So, people who have boots on the ground, so to speak, see the inflation not going down anytime soon. Another indication of that is the new home sales that came in today, well below expectation. The expectation was for 865,000, and we have 769,000. So almost 100,000 below expectations and way below the last months as well. And the main explanation for this is that the median home prices is up 18% year over year. And so that is being blamed for the drop in sales and affordability. So if the housing prices are up 18% year over year, what does it say about our inflation reading? As everybody knows, housing is a major expense for most people. So as the housing pricing are going up, how's our inflation reading is so low? The gas prices
a paradox,
are up,
isn't it? And
right.
It may also, there might be some geographic differences in where the homes are being sold too, that we're now seeing homes being sold or houses being sold in bigger cities. But it's hard to speculate on that without digging into the data.
Right, but it's still median home price, so that should be reflecting somewhat of a median home price, right? But the negative was that the service PMI came in also below expectations and below last month, and that is also very surprising because service PMI, which I would expect to be pretty high, given that after the reopening, people had all this free money and pent-up demand, so you would expect them to go out and spend on services in particular now that the economy is opening up. So having that number below expectations is a bit concerning. So, but the market didn't react so much to any of this disappointing economic numbers because they probably think that the Fed would look at those numbers and not do the tapering or tightening so soon. But the Fed is in between the rock and the hard place. On one hand, they may have inflation that is going out of control. And on the other hand, if the economy is slowing and they start tightening, so they would have to decide what gives, the economy or the inflation.
And what we're seeing right now, at least, is one of the things I like to look at is emerging markets, because that to me is more of it's less, it doesn't benefit by inflation, it benefits by reflation. So it's slightly different. It doesn't mean the prices are going up. It means that the economy is sort of rebounding in a non-inflationary way. So you have productivity increases that are matching inflation. And so the emerging markets have rallied pretty nicely right up into February, like a lot of these momentum stocks, and have been kind of in this pulled back, but really didn't pull back all that much, and have just been sort of chopping around since then. But we might have seen the start of a rally recently, but it's kind of in this, it's a little bit of a uncertain rally so far. But I think if this rallied, and then we're also seeing inflation sensitive stocks rallying at the same time, then it's kind of game on with inflation. But haven't really seen all the stars align yet. But energy, all the cyclicals like in Alcoa, all of them have been rallying really nicely the last few days.
Well, copper was up for 3 days as well.
Right. And so crude up, copper, let's look at copper. Copper up for 3 days, and then lumber up, or it's bounced off of its 200-day moving average. And then gold and silver, not really, rallied a little bit today, but not quite as well as copper. Crude oil, I think, close to new highs, right? I think it actually did hit a new high and then
it did.
pulled off, right?
Yes.
And then one of the momentum plays that I like to watch is the ARK Innovation Fund, and that's had a really nice rally over the last several weeks, and maybe getting a little ahead of itself with this kind of parabolic move, but it's all the components seem to be rallying pretty nicely, like a Tesla, for example. Big rally today. And another one that fund holds is Coinbase, which it's because of crypto, it's down near its low, but it has bounced off. It bounced off its low, which is around 212, pretty nicely, and it was a bit over 230 today. But I would expect it to, if crypto can keep bouncing, then it should follow.
Right. And the volatility index today made a new low and was sold off in the last couple of days significantly. And that kind of makes sense because our realized volatility, for example, today was just horrible, and we didn't do nothing moved pretty much. Even the bonds or the US dollar were kind of trading everything in the very narrow range. But on this new low in volatility for the year, it's surprising that S&P 500 still didn't manage to actually make new all-time highs today. It was just stuck in this narrow range. But as Victor likes to say, this usually doesn't last long because the infrastructure need to make the money. So the big move is probably coming soon enough.
So and maybe switching over to crypto to talk where we had more volatility, of course, and that it's made a modest bounce off of its lows. I think it's let's get that that I don't think it's quite there yet. At least it's off the 30,000 level. one of the things that I think is interesting that I'm watching is where the Bitcoin futures are, because I think it was a little bit of interesting behavior today that if you look on an hourly chart, then it went right up. So the Bitcoin futures, of course, don't trade on the weekends, unlike the spot. And this went right up to, it bounced like everything else, went right up to the 200-day moving average, and kind of it seemed to act as a kind of resistance. And it pulled back off of that, but it wasn't a huge pullback. So I think I'd expect to see a retest of that and an attempt to break through. And it's interesting that in a way it seems like that the futures behavior is dominating the spot in this case, or at least that it could just be a coincidence, but it's something that I'm watching. And but right now, if you look on Bitcoin itself, the spot, it's still well below some of this resistance level, which is right now around 35,500 level. That if it gets back above that level, then we could have a pretty nice rally. It's going to more likely to chop around between here and there. And but pretty much everything bounced. Ether was down as low as 1,700 yesterday morning. Bitcoin got down to high 28,000 range. And so they've all rallied a good 10-15% off their lows, which is impressive. But now we've seen this first pullback, first real pullback in this rally off the lows. So this is the test of whether or not this rally can continue, I think. So those are kind of the highlights, I think. I think it's the story. The other story I would point out is that there's just been incredible carnage in the DeFi space, and just something like a Uniswap, which was trading as let's say as high as over 40. Actually, let's go back to daily chart, up in the 40s a little bit earlier this year, is now at 17. And so there've been a good 60-70% moves off the highs, or something like, it's just the carnage is incredible on something like Synthetix, if I can find that one, or a Yearn, maybe even a better example.
What about PolkaDot as well?
PolkaDot, I'll show that in just a moment. Synthetix,
Right.
all of these, like Synthetix was in the high 20s a little bit earlier this year, and now it's at 6 and change.
Wow.
So these are, if you believe in the DeFi thesis, then these are, it may be a really nice opportunity to pick up maybe some small startup positions. And right now they're so cheap, they've been beaten down pretty severely. But if we look at PolkaDot, which is, it's not really excuse me, Ethereum competitor, although some people like to think of it that way. It's more of a, it's similar in some ways to Ethereum, but I think it has some differences, and it's likely to be in some ways complementary to Ethereum and to Bitcoin, and not really compete directly with either one of them. But this one has just taken a huge pounding. It was, and this was founded by one of the original founders of Ethereum, Gavin Wood. He left over whatever they say, creative differences or whatever, and started his own. And so this, I think there's a lot of potential here. They've already built some projects on top of PolkaDot that they seem to be doing pretty well. And but I think that some of these, I call PolkaDot maybe a second tier platform coin, and then the DeFi space. There's just, if you're looking for some bottom fishing, these are the places to look. And I mean, obviously Bitcoin, I think that Bitcoin though will outperform if it does rally here, if it can rally, it'll outperform the rest of crypto for the time being. It's a safer place to be. And if you look at the Ethereum Bitcoin ratio, it's down. Even in this rally, it did try to bounce a little bit today, but I could see this go lower. I was saying originally 0.06. I think it's probably headed down to the low 0.05 range. And that's okay. That doesn't mean that Ethereum is not going to do well or won't rally. It's just it'll underperform Bitcoin. And so I think Bitcoin will lead for a little while if it can rally here.
If you look at the Bitcoin daily chart, it's very interesting that it has undercut the 30,000 level and got probably lots of people stopped out. And so now it has reversed and ready to rally. So to me, if it breaks below that 28 something level again, then it's really not good and it's going to probably 20,000 level. But if that level holds, do you think that is the bottom?
I think there's, although, yeah, I do hear that a lot. There's a case that there's, some support down in here where, and like where it did bounce and that, it may find, if it does move bearishly, that it would more likely chop around in this space. So nobody really knows, of course. I mean, I'm thinking that my own view is that Bitcoin as well as all the rest of crypto has gotten a little bit oversold, and I think there's been just this profusion of bearish news, like with the leading thing being China effectively shutting down mining, which it's been one of the leading countries of mining for Bitcoin, and it's being shut down. But they're moving, a lot of it's moving to the US because there's a good amount of clean power that's available here and clean power capacity. So it could in the end be a really good thing, both for the US and for Bitcoin to not be dependent on China. That's been like, it's, as I've said before, it's like every 3 months. So China's about to ban Bitcoin. And now, it kind of is, it's not clear whether they've truly banned it, but they are shutting down mining and they're shutting down the miners, like bank accounts and so on. So they are adverse clearly now, and they made that clear. But in the end, it could work out not so bad. Once this, there's been this, the issue has been that there's been this decline in hash rate. So we've seen this decline in the hash rate, and maybe it's better if you put like some kind of moving average on this, but we've seen this big decline in the hash rate, which is sort of how much computing power is being put on Bitcoin. And this is entirely because of China basically shutting it down. But
doesn't hash rate decline with price anyway, because it becomes less?
No, actually, not necessarily. Because see what you saw here, like where we had, so going back to 2018, we saw basically price fell during 2018 by something like 80%, but the hash rate didn't fall by 80%. In fact, it kept going up even after it peaked here in late 2017. So it kept going up, and then it started to pull back because the price fell so much that marginally profitable miners were no longer profitable. And so that's when some of the miners started shutting down voluntarily here. But as soon as price recovered, even though the price itself was way below its high, the hash rate went well above its 2018 high. And so now what we're seeing is a decline in hash power, is driven entirely by China, not by the price. If the price were to fall by, I'm just making this up, like 70% from here, 80%, you definitely see a decline. But if Bitcoin's above, say, 10,000 or 8,000, then it's quite profitable as long as your power is cheap in the way that it is cheap in Texas or Washington State, where if you can get power for, let's say, 10 cents a kilowatt or 8 cents, then it's quite profitable to mine Bitcoin.
So does hash rate declining represents slowing of the transaction speed verification?
Well, that's a separate issue. So you can look at that. And so the transaction count for Bitcoin is a little bit off its high, but it's still well within, actually, it's probably better if we look at a more, just the recent data. So yes, we've seen the decline. In part, that's a decline of, it's because of the price going down in part, but it's also because of the hash rate. Like there aren't as many miners mining, and so it's threatening the network a little bit. What I would expect to see is, as that hash power comes back, then we'll see it go back at least to this range, which is, so you think this is about, it's been about from its absolute peak here. Well, let's say from this level, and this is a moving average. So if it was at the, let's say, 325K range, it's now in the 225K range. So it's fallen by about 25% to a third. And I would expect to see about half of that get recovered once the miners start up in another location. But if you look at something like Ethereum, there's been a decline in transactions there, but a lot of this is because of people trading, that when a market goes into a bear market, then the trading slows down. And so you have to, what you can see though on Ethereum is the contract calls, which are, these are actual people actually using the network. And so what you see there, so this is taking out all of the trades that people are making and just looking at how people are actually using the network. So these are what are called internal contract calls. And it's when a contract calls another contract. So you're doing something kind of complex where there needs to be these multiple kind of programs that are running in order to do whatever you want to do, like on decentralized finance. You see, this is pretty close to its high. So in fact, the network is being used. And I would say it's harder to say this with Bitcoin because it doesn't have the same type of statistic, but like the degree to which it's being used is probably not down significantly. What's dropped is the trading activity. And so this is a really easy way to see, well, what's going on with Ethereum when you take out the trading, because this one could include a lot of trading. Or if you just looked at transaction count, right, it's way down because of there's less trading happening. But when you look at the contracts without that, contract calls without that, it's pretty close to its high. So it's what that's saying is that if you look at things like the what's called net unrealized profit and loss, where this is how profitable are the positions that people are actually that people held based on when they acquired, what the price was, and so on. And you see Ethereum is pulled way back and is kind of in a still positive position. I mean, it's above where it was in January. But on the other hand, Bitcoin, if we look at the same thing, has it's really gone into, I wouldn't say I don't know, like a panic oversold kind of territory, but definitely a neutral territory where you can't say that this is in a bubble. It's sold off enough, and there's enough traders. Only this is now saying that half of the traders, not half of the positions, but half of the wallets are basically no longer in profit. And so based on when the positions were acquired, but you can look at something like percent supply and profit, which is saying not quite the same thing. So about 70% are in profit, which is pretty incredible when you consider that where this started from, in its early days, or even where it was in 2017, it was below 1,000, and for 70% to be in profit, that's pretty big drop from where it was just a couple months ago at 100%.
Well, that's why to this point, given that Ethereum just dropped almost 60-70%, and is that going to affect how people view crypto in general and Ethereum and all other DeFi coins, which dropped some of them even more than 70%? Would people be eager to just get back in, or would people be scared looking at this volatility and saying, hey, it just fell 80%. Is this a bargain? Or are they just going to say, well, it fell 80%. I'm scared. I'm never buying this stuff again.
Well, okay. So there's a couple of answers to that. I'd say that definitely there's a bear market psychology that takes hold. And I would say this is a bear market. It's not just if it were, some kind of very quick sell-off that then rebounded, that would be pretty crazy, but you could still make a claim that it's not a bear market. But what I think we're seeing is it's a real bear market. And so there will be a certain bear market psychology. Now, whether it is as deep as some bear markets have been in the past, that's an open question. And I do think that it might not last as long as some of the ones in the past where they were about 2-year bear markets, because we've had so much institutional adoption and new people entering the market that are a little bit more serious investors, and maybe they trade a little bit more. They trade around their positions, and they're not the hodler, as the saying goes, and so they don't lose their shirt when it goes down. They've got a bit of a cash position, or they're well capitalized enough that they can take advantage of a big drop. So that's one thing. It's a little bit more mature. But if we go back to look at some of these DeFi, then that's where I think it's that the point I would make on something like Yearn is that this is basically trading at something like a PE. They actually do have earnings, and they're generating. So this is at a market cap of, I am not going to get the right number, but let's say about 800 million. They've got something like 2 billion under management. So it's trading under its assets under management, and they're generating something like, I'm going to say like 100. So it's trading at basically a PE of something like 15. They actually do have earnings, and they actually could pay out. It's like right now they're retaining their earnings, but they could pay out dividends to their token holders. And so there's.
Who are they, by the way, who keep the earnings? Because it's not a company, so it doesn't.
Oh, well, that's okay. That's a good question. So you can look at that, but what it is Yearn is basically like a set of hedge funds, in a sense, decentralized hedge funds, where you don't have to have $2 million in assets or whatever to invest in. They are managing funds, and they get a performance fee, and they get a performance fee and management fee. And part of what that is like, if I have an idea about a fund to run, I could go to them with an idea, and the token holders, which I have a little bit of this, then you can, they vote on whether or not to, they look at the strategy, you can analyze it, and they decide on whether or not to accept this. And then that person gets a share for coming up with the idea and the algorithm. And then the organization itself has a treasury that is managed by the community, and the community can vote to disperse them. They have in the past. And right now they're choosing to retain earnings to build up a really nice war chest. But it's managed by the community, by the holders directly. And that's really kind of, it's a different world than like running a company. There's not a board, there's not a president. It's run by the holders, and they vote on everything. And
That's amazing, really.
So it's it's like in a way it's sort of like it's called decentralized autonomous organization, or DAO, and in some ways it has similarities to like worker-owned cooperatives, things like that you often hear as sort of socialist experiments, but this is very much a capitalist organization. They have a very clear goal to make money and to make money from decentralized finance. So this is, in my view, one of the true blue chips of DeFi, and it's been really beat down. And now it's trading at a PE of something like 15 when it's growing at triple digits. Even in the middle of this, you saw the Ethereum contract calls going up. This is who is getting who's running the contracts, one of them, or something like a Synthetix, where they have like synthetic assets that you can trade, and for example, like a synthetic Apple stock or Tesla stock that trades on Ethereum, and they have ways to manage it and to make it mirror the price of that asset that trades on a stock exchange or whatever.
But why would you want to do that?
What's that?
Why would you want to trade a synthetic Apple stock?
Well, because then you could run you could run a fund that has all sorts of assets, like a true hedge fund or whatever, or a true portfolio that cuts across asset classes. You could have crypto, you could have regular like dollars or US bonds or Tesla stock or Apple or whatever, and you're managing that all on a decentralized finance platform. So you can mirror, if you think that the SPX is going to outperform crypto, then you can invest in the SPX, and so it's really a way to have better risk management and diversification, and it makes these decentralized platforms or something like Ethereum much less like susceptible to a bear market. Although it might be in a bear market right now, there's these these platforms like a Synthetix or Yearn are being used more than ever, as you can see from the contract calls. That's again where that's happening and why that is at all-time highs. So that's what I think the story that's not being covered very well is there's an enormous amount of activity, and it is profitable, income generating, and these are investments that they're untested. They something could go wrong with them. I'm not claiming that they're like widow and orphan kind of stocks, but they are might be worth some small allocations. Given the prices are so low, it's a lot less risky than it was just a few months ago. But I think that getting something like Yearn at 30,000 where, I mean, you realize there's only 33,000 of the tokens, so it's not like there's millions of them, like even Bitcoin. There's only 33,000 of these tokens. So at 30, it's trading at a $1 billion total market cap. But anyway, some of these have, it's all the market cap that you should look at. And I do suggest going to CoinGecko, and they have a DeFi page there where you can look at the market cap to total value locked ratio. So it tells you, so that ratio is kind of like TVL is kind of like looking at assets under management for a financial firm. And so obviously it's not, you could think, well, the platform, there's ways to value it, or ways to use that as a valuation measure with financial firm. You could think, well, they might collect 2 or 3% income from their total asset base, right? Because of transactions, because of fees and things like that. It's similar in DeFi. There are fees, there's costs to using the platform. And depending on the policy of that platform, it might be the treasury is growing as the business grows. But that treasury, it's up to the community to decide how that gets used. If it gets big enough, there could be like dividends that start being paid. And I think that is coming down the line. Something like a Yearn, or one of my favorites is Curve, where they're already paying dividends. They pay something like, it's like 7% a year or 8% a year dividends. Wow. And now it's even bigger because the price has been pushed down so much. So it's
and that's Curve?
This is Curve, yeah. This is called Curve, and they're an exchange. So they compete with Uniswap. And they're probably the biggest exchange by far for stable coins. Like if you want to trade USDC against Tether, against DAI, they're by far the biggest for that, because they have an entirely different algorithm that minimizes the slippage between these. So you're getting the best possible price when you're trading one to another. But they have other things there as well besides just stable coins. But it's a competitor to Uniswap, and they are known for that, they're kind of low slippage trades. But and I think it's also a very innovative platform or firm. So these are just some to look at. The Synthetix, Yearn, Curve, all worth looking at. And they've just been, Uniswap, of course, also been really beaten down. And these are, Uniswap has more volume than Coinbase in trading. And so
wow.
These and there's ways that if you're a user of Uniswap, you can be a liquidity provider, you can be a market maker, and have kind of a passive market maker position and earn money on your crypto by being a market maker for different markets. Same thing with Curve, you can do that there too. But so these, I think, are really attractive side investment. I'd say the main thing for any crypto portfolio ought to be Bitcoin, Ethereum, maybe some others, but then I would say think about some small positions in some of these. I think there could be a lot of long-term potential in the big ones that have a good reputation.
Right. It's amazing that some of those platforms that you have just described sold off more than the Dogecoin, which is roughly useless. And it's actually, somebody's actually bidding up that. And it's been up quite a lot. So lots of people are trading it. I've seen some people who are trading millions of dollars in it. And so it's up, what, 24% in the last day or so.
Right. Yeah, it's well, it's inevitable that it'll bounce along with Bitcoin. Well, it'll get dragged up like everything else. But I think what happens in in with DeFi is there's it's just like concerns about the bear market, because so many of these, like a Uniswap, it is driven heavily by transaction volume or Synthetix. And so if we're in a long-term bull market, then transaction volume is going to go down. I mean, it's going to stay down for a while. And so I'm not saying there's no risk. That's why I'm saying look at small positions. But on the other hand, I mean, do you want to buy something when everyone is euphoric about it, or you want to buy it when everybody's just the opposite? And I would say for a long, if you want to invest in crypto the way that people that like Polychain Capital or Multicoin or some of the other A16Z, some of the other big institutions that invest professionally in this space, how they would look at it, that's exactly how they're looking at it. They're looking at it like, well, the market's handing us an opportunity, and you just know that a Uniswap is going to continue to do well, and it's not going to go away just because the price is down. And so it's just a good opportunity. It's a chance to pick up a little. And if you really want to do it right, then the way to think about it is the dollar cost average in. Don't jump in all at once, but maybe pick up a little here and there over the next couple of weeks.
And which is the best exchange that has all of them? That's the easiest to buy.
Well, I'd say, okay, so you could trade Uniswap. It depends on where your money is and how easy it is to get there. So I think if you're going to buy it with fiat, like US dollars, then something like Coinbase might be a good one, or Kraken, either one of those. And you'll be able to buy with dollars and or deposit dollars and then trade directly with the dollars. If you already have crypto and like let's say Ethereum, and you want to trade crypto for crypto or USDC, something like that, then use Uniswap. Or that would be my use the Uniswap if you just want to trade crypto for crypto. But probably the best one would be, I'd say, Coinbase, Kraken, or Gemini would be the best 3 regular exchanges to use. There are people that use, say, Robinhood, and they might. I don't use Robinhood myself, and so I can't say like what might be available there. But the problem with Robinhood is that you're not actually holding the crypto. It's sort of like what used to be called a bucket shop in stocks, where you're buying kind of a placeholder position. You can't withdraw it. So it's better to buy it on, say, Coinbase or Kraken or Gemini, where you can withdraw it to your own wallet, you can hold it, and you can actually use it. Because with if you buy some of these like a Yearn or Uniswap, you can vote. You can there's different things that you can do with these tokens that aren't just passively holding it for a trade or an investment. You can actually use them. So with Synthetix, you can use it as collateral for lending, and or any of these really. You go on a platform like Aave and use them as collateral for borrowing. Not that that would have been all that smart to do, back here when prices were at all-time highs, but that's a very popular activity within DeFi is to use a crypto as a collateral for borrowing. And most of these, like a Synthetix, it's like you have to put down 1,000% collateral on so 10-to-1 collateral for whatever you borrow. So it's not like it's a very super aggressive lending that's happening.
But why? I must be missing something. If you want to borrow something, why do you need 10-to-1 collateral? If you already have this collateral, why don't you just use that collateral? instead of.
Okay, so the answer to that is that you can compound your returns, and so an example is like, for example, you can it's called composability. So for example, I could lend well, let me show, for example. Well, the point is, I was just trying to show that you've got, you can deposit, you can earn interest on what you deposit, and then you can also use it as collateral. And then, well, why would you use it as collateral? You could, for example, you could borrow Ether and then you could short it by selling it for US dollar coin against your and so you've hedged actually by borrowing Ether against your whatever your stable coins. You can actually be short, and so that's a very common thing that people are doing. And I think it, in fact, it exacerbates some of the down moves in Ethereum, is and not in a bad way, because do shorters hurt the stock market? I don't think so. There are some people that say they do, like you talk about what's the guy's name? He was the Overstock guy who always complained about his stock being shorted. Other CEOs have complained about that, right? And I don't think it's a bad thing, because a shorter, when the market does bottom, they're a buyer, and they provide a bottom to the market that's pretty convincing and give you the first relief rally that maybe at some point turns into a real rally. So I am not an anti-shorter in any way. I think that it does, though, exacerbate some of the moves that we see on the upside and downside. And but that's one of the main things that people are doing with this. But you can deposit, and then the what you can earn interest on what you deposit, but then you can borrow also against. And if what you're depositing is in very high demand for people to borrow it, then you can earn a pretty nice rate of interest.
Wow, it's a whole new financial universe out there. It's fascinating. But just to digress slightly and briefly, there is this new Delta variant that we talked about, and now CDC says that it's 20% of the recent US COVID cases is the Delta variant. And so I guess my take is that they're just trying to scare young people to get vaccinated, because Biden cannot achieve his vaccination target that he has promised by 4th of July. So they're desperately trying to get young people to get vaccinated. And they claim that this Delta variant is affecting young people. And interesting is that at the same time, the CDC advisors are saying that there is likely association between the Pfizer and the Moderna vaccines and the rare cases of heart inflammation in young adults. So maybe they should just look into and see what is the high risk for young adults, whether it's high risk that they get heart inflammation or that they die of COVID. It's a relative risk situation, and CDC is kind of silent on this right now. They're still investigating. Meanwhile, more and more people are having those rare side effects. And as Andy, you were saying before, that the World Health Organization doesn't even recommend vaccines for young people. So we have this discrepancy between science. Some science apparently says do it, and some no, don't. And so who do we trust?
Well, I'm going to need to go, but
Yep.
Have a good evening. Thank you.
Thank you, Andy, for all this DeFi and crypto explanation.